If you're looking to boost your trading game, backtesting the SMA Crossover Strategy in Excel can be a good starting point to take your trading decisions to the next level. An SMA Crossover Strategy involves two simple moving averages, a short-term and a long-term. A buy signal is triggered when the short-term SMA crosses above the long-term SMA, and a sell signal is prompted when it crosses below. It's a popular strategy among traders because of its simplicity and effectiveness. This is the final model. All the formula are in the description, where you can also find a link to the Excel file. Historical market data can be obtained using CryptoExcel add-in function OHLC. Using the parameter 2 and 6 for the short and the long moving average, we have a loss of around 26,000 USDT. Not a very good result. It is time to train our model. We will use the Excel Solver, a powerful tool in Microsoft Excel that helps the user to find optimal values for formulas based on constraints. The optimized average duration for this model are 48 and 62. The profit raised to more than 43,000 USDT. Congratulations, you have just learned a powerful way to leverage the capabilities of Excel to backtest your SMA Crossover Strategy, enhancing your trading decisions with data-driven insights. If you have CryptoExcel add-in installed, you can easily change pair, time frame or exchange and reuse the model. Just remember to adapt the length of column H to T. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more expert trading tips and tricks straight from CryptoExcel add-in.